Welcome to the Timesaver Calc for Tax walkthrough, Part 4, Calculating Directors' National Insurance. Company directors are classified as office holders. Office holders fall into the definition of employed earners and are liable for Class 1 National Insurance contributions. The earnings period for calculating national insurance contributions is usually determined by the interval between payments. For example, an employee who is monthly paid will have a monthly earnings period. However, to calculate national insurance for company directors, you must either use an annual earnings period or a pro-rata annual earnings period. This means HRMC provides special annual earnings levels for the calculation of directors' national insurance. These are divided by 12 for monthly pay frequencies or 52 for weekly and prorata. Prorata is used when an employee becomes a director partway through the tax year and uses a weekly division of the annual earnings levels, regardless of if the employee is monthly paid or not, as it uses the number of weeks the employee has been a director. So all you really need to know is if the employee was a director from the beginning of the tax year or became a director partway through the tax year. You can see at the top of the payslip screen the DIR box. Clicking this cycles through N, E, A and P. N is the default setting for calculating normal employees. E is used when the director has been a director from the beginning of the tax year and pretty much calculates as an employee. A is reserved for calculating the last pay period of the tax year when the director's national insurance is forcibly calculated on an annual basis. And P is for pro-rata, when the employee becomes a director partway through the tax year. When this option is selected, the WK box becomes enabled. This is where you enter the weeks as director. Let's try calculating the simplest one first. E. The director has been a director from the beginning of the tax year. We will give them a monthly basic pay of £3,000. Clicking Calculate gives a national insurance value of £278.40. This is actually the same as if N was selected in the DIR box, but it is using an annual earnings level divided by 12. This is the simplest calculation for directors' national insurance contributions, and it is the same for weekly. But moving on to prorata, we have to do a bit of maths to work out how many months the employee has been a director. Let's say an employee becomes a director from the 1st of December. That's week 35. There are then 18 weeks left in the tax year as a director. We do not need to enter any brought forward figures from their previous employment as an employee. We set the monthly pay period to 8 and weeks as a director to 18, then enter their basic pay as £4,000. This gives the director a national insurance value of £140.88. Now, clicking Next takes us to month 9. We do not need to change the weeks as director. That will stay as 18 throughout the rest of the pay periods. Clicking Calculate gives the director a national insurance value of £480. Next, and Calculate again, gives the director a national insurance value of £480. Next, and Calculate again, gives the director a national insurance value of £437.70. Next, and Calculate again, gives the director a final national insurance value of £80. That was not so hard. Of course, there are more complicated scenarios for directors, but normally they follow the same rules. I will leave a link in the description for more detailed information about calculating directors' national insurance. In the next video, we will have a quick look at the P45 screen.